Hello, everyone out there in podcast world. Hope you're having a wonderful day. You were listening to or watching the Service Business Mastery podcast. I'm one of your hosts, Tersh Blissett, sitting virtually next to my co-host, Joshua Crouch, and we get to talk to the world famous Miss Ruth King today, and we're going to talk about maximizing your labor, but a little bit about Ruth. If you don't know who she is, I'm honestly surprised that this is the first time we've had her on the show because Miss Ruth has been around the industry forever. Women in HVAC are, and we're actually going to be out at that event at the end. When is that? Beginning of November?
November 2nd through the 4th in Phoenix.
Yeah, so Miss Ruth has been in the industry since 1987, and she talks a lot on the financial side of things and does a lot of that coaching side of stuff. She's a channel manager for HVAC Channel.tv and also the president of Business Ventures Corporation. One of the things that I find really awesome about Miss Ruth is the fact that she holds her unrestricted HVAC license, and so that's really awesome. And she's not far from me as well. So anything ever happens to my HVAC license, I'll call Miss Ruth and see if I can borrow hers.
Yeah, no, it's super exciting to have her on. I mean, this goes back to like before women in HVACR was what it is today, and people that blazed that trail to get it to that point. And obviously the growth on that side of things, not just in HVAC, but plumbing and electrical, all the different trades, with getting women and females opportunities that maybe weren't quite as readily available back in 1987 when she started. It's such an awesome thing to see, and we're super excited to support that event in November.
You know, one of the really cool things is whenever we mentioned that we were getting ready to have Miss Ruth on the show, that Pete Ramsey's like, he made a comment in our private group, in our Facebook group, and mentioned that he had taken one of her classes back in 1996 on pricing, which was really cool. It was a class that was put on by Linux, and so it's it's wild how much of an impression Miss King has made on our entire industry for so many years. But with that being said, let's give a quick shout out to our partners and the people who make this show possible.
Yeah, so I'll get started with Sarah. We got some really exciting stuff coming with Sarah and Billy in particular on the show. We can't say too much yet, but we're gonna Billy's connections and his connections with Sarah and some of the things that he's doing with that software are going to allow us to get some really, really fascinating guests on the show, which obviously is part of the whole reason we do this, is to find the best available knowledge and spread it to you guys. So just a thank you to Billy if he listens to this. And if you guys are looking for a CRM, take a look at sarah.tech /SBM, I believe, and you get a discount code and stuff like that. So check it out. Yeah.
Up Frog. So I'll give a shout out to Justin and Noah from Up Frog, digital marketing, Rehash. They do a lot of stuff, and we're actually going to have them on the show. Excuse me. Here shortly to talk more about. They've been on the show twice, I think now, maybe 3 times, but wealth of knowledge. Those guys have a ton of knowledge when it comes to. Justin amazes me when it comes to big data. Like when he starts talking, it's like, okay, I don't even
take
know
out
what
your
you're talking
notebook.
about. Yeah, Justin, let's hit record here because I don't know. I'm gonna have to rehash this a couple of times. But yeah, so Upfrog, huge shout out to Upfrog, and we appreciate everything that you've done. Company Cam. So we had Company Cam on the show a couple weeks ago, and there's a lot to Company Cam, and they do a lot as far as bringing photographs and images into one place and somewhere where you can just gather that and quickly access it. And it's not like a Google Drive folder that's we've all crammed stuff into and never found again.
I would say they're helping also with systems and processes for your field team, not just gathering and taking photos and storage, but bringing systems and processes so that way every single job follows a certain path, so that way you can increase your efficiency in the field and also increase your level of service, because every single customer gets the same service and you make sure that the jobs are done correctly.
Absolutely. I'm super excited to talk to Miss Ruth. So let's get this show started.
Are you looking for valuable business advice to reach that 7-figure revenue mark? Do you want actionable tips to properly navigate through every business challenge you encounter along the way? Let Tersh Blissett and Josh Crouch be your guide in getting you to the top here at Service Business Mastery. Tune in as they sit down with world-renowned authors in business, leadership, and personal growth who share valuable insights about management, marketing, pricing, human resources, and so much more. Let their nuggets of wisdom gold guide you in owning a thriving, profitable, and ever-growing business. Here are your hosts, Tersh and Josh.
Welcome.
Hey, Miss Ruth, how are you?
I'm great. How are you? Thank you for having me. I'm excited to be here.
Absolutely. So I'm super stoked to talk to you about the thing that most of us as business contractors and entrepreneurs, we kind of, it's really easy for us to stick our head in the sand and be like, well, we have money in the bank, so we're not broke. So talking financials,
accounting right there.
Yeah. Oh yeah. Checkbook accounting. Yeah, it works. Not really, but
no, not really. Shall I tell you a story about that?
Absolutely.
Please do.
So before we do that, I inactivated my license a little bit ago just to keep people from, like Tersh was saying, if something's wrong with my house in the van, I'm going to call you.
Oh, shoot.
License.
Tersh needs a new backup plan.
Oh, man.
So it's inactive right now. But anyway, so two partners start a business and they grow it to $2 million in like 12 years. They never looked at their P&L. They never look at their balance sheet. As long as they have cash, they're happy campers. They can take their discounts. They can pay their bills. They can do payroll, and they have some money for them. So about $2 million, the growth absolutely stops. I mean, you're growing at a very fast pace up until about $2 million and just stop. And within a couple of months, they're not being able to do payroll every once in a while. They're scrambling around. They're not being able to take their discounts. And they're going, whoa, we've never had this problem before. What's going on? So they were smart enough to make a phone call to me. And turns out, long story short, they were losing a nickel for every dollar they took in the door for 12 years.
Ouch.
So
wow.
You're saying, how can you do that? Well, it's really easy because the money that comes in from one replacement job or, project, whatever, starts the next one. And as long as the company continues to grow, then there's always continuous cash flow. The thing is, it was growing by 5% less every single month than it should have.
Wow.
So, yeah, you can do it out of your checkbook. Go ahead. Just don't stop growing.
Right.
You better be really good at sales.
Is that not the definition of a Ponzi scheme?
No, it really and truly is not, because they weren't trying to attract more and more people to dump money into it and then not being able to pay them back.
No, I agree.
I can see why you say that though.
But like whenever you think, I was thinking about this the other day. I was watching some documentary and they were talking about the definition of a Ponzi scheme. And I was like, that almost sounds like how I was when I first started out. I was taking money from this person and paying this bill over here and then taking this money over here. And so I love to ask that to people to see what their reaction is.
If you've ever looked, and I read a lot of business biographies and I read a lot of business books about, I want to know how people did what they did. So in Jeff Bezos's annual reports from Amazon, in the beginning, if you read his early ones, he never looked at profitability. Remember, he went out and said, I don't care if we're ever profitable and everything else like that. Well, what he did do, if you read his annual reports, he looked at net cash flow per hour, and I look at net profit per hour, but he looked at net cash flow per hour. As long as his cash flow was continuing to increase, he was fine, because, the money coming in from one would start the next, whether or not it was profitable. Now, at some point in time, you actually have to turn the corner and be profitable.
Right.
Had he ever stopped growing, Amazon would have imploded.
That's my
Because
thought. Like you can't stop at that point. So then
that's
that's
right.
that constant pressure of you keep growing and growing.
I wonder
Yeah.
how many of these businesses out there that we know as like global huge businesses now started out that way, and they started out that way. It's like, well, they just continued to grow, so they didn't implode at that point. Like your story where the $2 million business kind of like gets to the point where it's like, holy crap, I can't pay payroll now. These other companies, they just kept growing, so they kind of grew past that, and then finally figured out how to manage profitability and stuff like that along the way. That would be really interesting to kind of hear some stories in that regard, because there's a lot of businesses that just grow so fast and they don't know what the hell they're doing.
Well, if you look at the Inc. 500, a lot of them grow themselves out of the business because they don't keep up with the cash. One thing that Jeff Bezos did very, very, very well is he managed cash, and he managed growth through cash. Had he not done that well, then guess what? Amazon wouldn't be here today.
That's so to even think that Amazon wouldn't be in our lives.
Yeah, I mean, he was really smart about it, and that's what's really kind of cool, because most people don't think about, instead of net profit per hour, cash per hour, and as long as cash per hour is increasing, he's right. He was absolutely right. Now, we as business owners, we don't have the cash flow that Amazon does, even when they did in the beginning and they were still all books. It's just something that we can learn a lesson that profitability eventually is important. But if you ever stop growing and you don't have the cash, net cash per hour continues to increase as you're growing, you're in deep trouble.
So really quick, before we get any further, can you tell everybody who you are, for anybody who might be watching or listening to this and they don't know who you are?
Okay, I started in this industry with Service America in 1987 and Ron Smith. I found a niche that I absolutely loved. I am really, really good at the financial side of business operations and financials, and it's been an incredible ride, an incredible journey. I spent 18 months with Service America, and then went back out and did my thing. And I've worked with contractors in every state with the exception of North Dakota. So if somebody wants to send me to North Dakota, I just hope it's not in January. February. I'm going. I got to check the 50th state off my bucket list.
That's funny.
But some of the contractors that I've worked with have sold for multi-millions. It's not an easy process, and there are times where I have very short relationships because somebody doesn't want to do it, I quote unquote lost my oldest client from 1987 last December when he sold his business for as much as he wanted it to sell. And, he's happily in retirement. I helped him sell it, and it was, he's great. So Larry, you're gone, but we still talk.
Now, once they sold, I mean, right now, like this past couple of years, really selling has been what we've talked about and heard a ton about. How important has the financials been? Like it's always important, but was it more important now that there's a ton of demand for service businesses, or is it less important, or is it the same?
It's always been the same. I will tell you that companies with lousy financials got lower multiples because they couldn't tell what was there. Companies that didn't have financials didn't get PPP loans unless they faked their financials, which I don't know whether they did or not. And I really, really don't want to know.
Yeah.
But the reality is without good financial statements, you can't make good business decisions. And they're not as scary as as everybody thinks they are. I would assume that most of the people who are watching or listening to this have read a wiring diagram and looked at a wiring diagram. And you look at it and you go, think about the first time you ever looked at a wiring diagram. You went, what is this?
Mm-hmm.
I don't understand this. What good is this? What is this telling me? And you learned it because you really and truly needed it to be able to wire, to be able to have systems that function properly, install correctly, et cetera, et cetera, et cetera. So now you look at a wiring diagram and go, no big deal. I had to do this, and 5 minutes later, it's done. Or, an hour later, whatever it is. So the financial side is exactly the same way. First time you look at the balance sheet, you go, hey, what is this? What is it telling me? Well, you do a little homework, which, you can do in English. You don't have to do it from an accountant standpoint. I wrote the books,
Hmm.
teach the classes. Um, and so what you end up doing is going, oh, why did I ever think this was so hard? And if you just put a little effort in it for a couple of months, not every day, maybe 15 minutes a day or, 15 minutes a week, you will get it. And it's just like that wiring diagram who was like, I don't understand this, to, oh yeah, I got it, snore. Financials will be, I got it. Generally, you're not going to go snore. You're going to say, okay, what are they telling me, and make good business decisions. So
So
that's the way I look at it.
what resource would you say we could use if we wanted to spend 15 minutes a day or something like that and learning?
Oh my gosh. Can I toot my own horn? I mean, I wrote
Absolutely. I want you to.
We
Okay.
would love you to do that.
Yeah, I wrote The Courage to Be Profitable. It's available on Amazon. It is Audible. It is Kindle. So there's no excuse if you like to listen and not read. That's fine. But it's literally what a P&L is, what a balance sheet is. How do you use them in English rather than accounting babble? The book is, if you want to read through it, you can read through it in 2 hours. If you want to implement, take chapter 1 and do it, take chapter 2 and do it, that kind of thing. It's real easy. Within a couple of months, you're going to have it. You're going to look at your financial statements and you're going to find out whether your bookkeeper knows what your bookkeeper's bookkeeping.
Yeah. So tell me, what's the difference between that book and the Profit or Wealth book? Because I know that's you have a couple of them that are bestsellers.
Yeah. Profit or Wealth I wrote after The Courage to Be Profitable because people were ignoring their balance sheets. They were getting their P&Ls, but they weren't getting their balance sheets. You obviously need the P&L first, which is the profit, in order to build business wealth. I mean, I'm not talking about personal wealth that you can inherit and stuff like that. I'm talking business. So in order to build the business wealth, you have to have the profit. So that's why I wrote the book Profit or Wealth. And then next year, my next book, which is called 101 Dumb Financial Mistakes, is coming out.
Is
So,
that
Like financials for dummies.
You were shadowing me for so long. You're just getting all the dumb things that I did.
I'm surprised you only found 101 by doing that.
well, this only the financial side. It's not the other sides.
That's the next book.
Yeah. Let me get this one out first, okay?
Right. So tell us just a high level view. If somebody's just starting out their business, like they're a technician getting out of the van, or they're getting out from underneath an employer and they're starting their own business. They have their LLC, they filed for that. They got their state license. What is the difference in your P&L and your balance sheet, and why are they important to pay attention to each month?
Okay. So your P&L tells you whether you were profitable or had a loss for a specific period of time, for a month, a year, whatever. Your balance sheet tells you true profitability, whether it started the day that you started your business, it will end the day you sell it, or close the doors or whatever. And your balance sheet also changes absolutely every day. If you get cash in the door, you write a check, your balance sheet changes. So what you do with the balance sheet is you take a snapshot, to coincide with the end of a P&L period, like January 31st, February 28th, March 31st, whatever. And the balance sheet really and truly tells you whether you can pay your bills, whether you're increasing your profitability, whether you're taking on too much debt, whether you're heading for a collection problem or an inventory problem or something along those lines. I would suggest, and most businesses starting out don't do this, is that they, number one, learn to price properly, because they are of the sense, okay, they were paying me $30 an hour and they were charging $300 for flat rate or whatever it was. I'm going to make a killing by charging $50. They can't.
Well, that's exact. And a lot of these, the large companies, the service experts, some of these large companies, they breed a lot of new business owners because these guys want to break off. They want to do it a different way. And they're like, well, they're charging $500 to replace a capacitor. That's ridiculous. I can do it for $75 and I can make tons of money.
No,
and they don't, and they just don't, there's things that they don't realize in there. And I think some really important points would be to understand what your actual hour costs. How much does an hour of your time cost?
Yeah.
in a
The
day?
other misconception that small business owners, the onesies and twosies say, well, my overhead is lower than I can charge less, right? I mean, that's the other thing. But think about it this way. If your overhead as a sole proprietor by yourself is $100,000 a year, all right, and you are the only one who generates revenue to cover that $100,000, one person is responsible for $100,000 of overhead. Now you hire your first guy, your overhead doesn't double. Maybe it goes up another 10,000 so that you pay for the truck and all the other fun stuff. So you now have $110,000 of overhead divided by 2 people. So you're in a situation where each person is now responsible for 55,000. And then we go to our third person and it drops, let's see, that makes it 120. So each person is responsible then for 40,000. So that instead of one person responsible for 100, 3 people are responsible for 40 each in covering all that overhead. So that is, yes, a sole proprietor's dollar amount is always lower than, a company that has 30 techs.
Right.
But their overhead per person is huge compared to a company that has 30 techs. When by the time you get to 30 techs, a single tech, probably the overhead cost per hour is somewhere less than $20 an hour, which is not a lot at that point. Most of the contractors I work with, the smaller ones, it's around 40. So think about it. You have a company with 30 trucks, their overhead cost per hour is $20 and yours is 40. So on an 8-hour day, for example, their overhead cost is 20 times 8 or 160, and yours is 40 times 8 or 320. So they can charge same as you do, make more, or they really can charge less.
Yeah.
And you find that when it gets to those times a year when they just need to keep techs busy, they'll go down and they'll give away the furnace with the AC, right? They give the whole giveaway thing that they do in the off season. As far a question I have for you, so there's these people starting out. So obviously this is a lot of information when you're first starting, because you're just excited. You have to, first of all, go get a job. You have to go find somebody to service.
Yeah.
You have to get your name out there. So you have to promote yourself like crazy. You have to ask your friends and family to promote you. You have to put yard signs and stickers and business cards everywhere. So when it comes to numbers, are there like a certain key set of numbers that people can like start understanding so they can build their first iteration of their hourly pricing or their flat rate pricing?
I would suggest they start immediately with flat rate. And I don't care where you are in the country, you should not be under $200 an hour for flat rate. If you are in New York or Palm Springs, California, you're going to be closer to 500 because of the costs out there.
Oh, I know people in town that are 600.
Yeah, well, you can do whatever you want. But most of these guys are thinking they're $500 an hour and I was being paid 30, I'm going to make a killing. So the lowest they should possibly be, and they go, I can't do 200, then don't start a business. I mean, you're probably going to be more than 200, but at least when you're starting, start there.
Well, the thing about it is as a technician, I've been guilty of this myself, and that's devaluing yourself. Like, it's like, I can't charge $200 an hour. I'm not worth $200 an hour, when in reality, you're worth much more than that. But it's just a
mindset.
It's that mindset. It's definitely that guilt.
Hey, I got the shirt. Look at that. The shirt's perfect today. Mindset is everything.
Absolutely.
I have to show you my abundance shirt. I have one that says abundance.
We should have planned this better, Ruth.
Yeah.
So I got a question. So you set your first price as you start out. Let's say if people take your advice, they start at $200 an hour. How often, and I'm sure this ranges depending on the size of the business and the people that you have to maybe reevaluate these numbers, but how often would you recommend in that first year or two they revisit their pricing and they look at the numbers with maybe a professional like yourself or someone else that understands the business?
You'd have to do it by your P&Ls. And that's exactly how I would do it. I would see
if they're just going at it and just, I'm getting so many calls in the door because I'm providing amazing customer service and I'm getting tons of word of mouth, which is amazing. but now I don't have time to spend any time on my QuickBooks. QuickBooks Online, I don't need, like, I have my receipts I've just kind of cap in my center console of my van. Like, so the first and foremost, they need that QuickBooks or the QuickBooks Online or whatever, capture the receipts, do the full P&L. And what if you don't have any idea about how to set up a P&L? Because when you first get a chart of accounts from QuickBooks, it's going to be a very basic, generic chart of accounts, not an air conditioning chart of accounts.
Yeah. Send me an email. I will send you a chart of accounts. No problem.
Love that.
I will send you chart of accounts.
I would challenge anyone that, even if you've been in business for a while, to email Ruth and ask for that chart of accounts, just to see what you've been doing versus what she has been doing. I opened up a branch in 2018 for a business owner about an hour away from the primary location. The whole goal was to grow it residentially, because that was my background. And I started talking with the accountant, and their chart of accounts, I ended up learning from Louis Bruno when he held some seminars online, and he was really detailed with this stuff. And I was just blown away at how much our business had our P&Ls were awful. They were the most generic things. There was only maybe 15 line items total.
Oh my God.
And I'm trying to tell my boss about this stuff, which obviously didn't go very well.
Yeah, I'm sure.
But it's just amazing. Like, and that's the beauty of like podcasts and stuff like this, is if you guys immerse yourself in education and you take the time to listen to this while you're driving around, or you're before the day is out, before tomorrow, learn from people like Ruth, who have been there and done it. She's done this with hundreds of companies. She's written books on it. Reach out to her and ask for that chart of accounts. Just, if nothing else, put your mind at ease that your bookkeeper they might actually know what they're doing. So,
okay. Then also, if you hire a bookkeeper, I will also give them the bookkeeper test. My rule is, you don't pass the test, you can't hire this bookkeeper.
Oh, I love it.
The test was done by the American Institute of Certified Bookkeepers, and they give the test to anybody, and they also will give you the answers. So I've gotten it, and I give it to anybody. And I make all my clients, when they're interviewing bookkeepers, if that bookkeeper, I don't care how good they look on paper, they can't pass this test, they can't hire. And they get pissed at me.
Oh, yeah.
Think about it. You've got a tech with 10 years of experience. He could have 10 years of experience a year at a time, repeated 10 times.
Exactly. Yeah. That's very, very true. And or it could be 10 years of wrong experience.
Yeah, exactly.
So you mentioned, as far as reevaluating your pricing, look at the P&L. So for people that might not understand what that means, what kinds of things should they be looking for that are like indicators that, hey, maybe my pricing is not right and I should reevaluate this now?
Okay. So first thing is, P&L is revenue minus direct cost is equal to gross profit, and gross margin is gross profit divided by revenue. And then you have the overhead component subtracted from it, and then you have net operating profit. All right. So that's a basic P&L. So what you want to do first is make sure that your gross margins are consistent. If one month your gross margin is 22%, the next month it's 48%, and the month after that is 36%, then it goes to 60%, something is wrong. All right. Either you're not accounting for inventory properly, you're not matching revenues for jobs and the expenses against those jobs. Make sure that you're on a accrual basis for accounting. And in QuickBooks, it's just one button. Mm-hmm. Not hard to do it. From there. And then, so that's the first thing. All right. So if your gross margins are consistent, then the next thing you have to do is look at your overhead piece of it and say, is my gross margin consistently covering my overhead? And that means in slow months and busy months. So if you're in a situation where it's February, for example, and typically, other than maybe in Florida, a slower month, are you still able to cover overhead with what your gross margin, gross profit is bringing in you? And the answer is no, raise your prices. All right. Now, point. The thing that I look at is I look at net profit per hour, which basically says for every dollar you bill, how much is dropping to the bottom line. And you also are looking at overhead cost per hour, which is for every dollar you bill, how much overhead do you have to attach to that to make sure that you make a profit on the bottom line? And the question really and truly is what net profit per hour do you want? You know, and I work with $4 or $5 million companies, starting them, and they have a net profit per hour, and we start at like $4.22. And I am not joking. Why in the world would you have a business and earn less than $5 an hour? I mean, seriously, go work at McDonald's. What's the McDonald's starting thing now? 17?
Yeah,
I don't
something
know.
like that. I feel like
you know, not to get off track, but I heard California, they have like a fast food thing that they're creating that it might go up to like $22 an hour for a fast food work for minimum wage.
Wow.
$22 an hour.
Your hamburger
wrap your mind around that. You might as well don't even worry about running an HVAC business. Go flip some hamburgers, get some free food, and live your life.
So how would you say you figure out your net profit per hour and your overhead per hour?
Okay. Net profit per hour you figure out by determining what your job costs actually are. And that's where you start. Mm-hmm. I mean, if your job cost is showing you at $5 net profit per hour, we have a problem. We got to start there. If it's showing you at $100 net profit per hour, terrific. You're doing great. You probably don't have to change your prices. Overhead cost per hour is specifically what your total overhead is divided by the number of billable hours. And you can calculate if you're a one-man guy, how many billable hours versus how many hours do you work? The only thing you can include in overhead cost per hour is your billable hours, not your total hours. All right.
That's okay. Repeat that really fast. What you just said there at the very end there.
If you're a one-man shop or a two-man shop, then the only hours you can include in your overhead cost per hour are those hours that you actually bill a customer for. So if you're sitting there working, 80 hours a week, but you're only billing, 20, guess what? The only thing that counts is that 20.
And does that count also for your net profit per hour or just your overhead per hour?
That allows you to calculate your overhead cost per hour. So let's take it backwards. Let's assume that you want a net profit per hour. Oh, let's just do $50, whatever the number is. All right.
Yeah.
So if your net profit per hour is $50 and your overhead cost per hour, let's say, is $40, so your gross profit per hour is going to be $90. And then if you hire your first guy and he's making $25 an hour, the minimum sales price is $115 if you can bill 100% of that person's time.
Right, which isn't always the case.
No, that doesn't happen.
No.
So, and let's assume you can bill 50% of their time. So you take 115 and divide it, by 0.5, and you get $230 right there. So that's why I said minimum of, $200 for flat rate. I mean, that's where it comes out.
100%. I mean, I don't see how you could do it any cheaper than $200 an hour. And hiring people with what we're paying people right now to work.
Yeah. And the reality is I don't care what somebody wants. If somebody walks into your shop and says, I want $50 an hour, you say, great, here's what I need your truck to generate in terms of revenue. And generally it will be somewhere between $350,000 and $400,000 a year for that truck. Can you generate $350,000 or $400,000, whatever the number comes out to be? Great, I'll pay you $50 an hour. They're either going to do it or they're not.
Now, when you have that conversation with people and you're holding them accountable, and they're like, "Oh yeah, sure, I can do 250, 450, 500,000,
whatever."
Yeah, and then they're 90 days in and they're generating $20,000 a month.
Okay, it depends upon where you are in time of year. So if they say it's 400,000, you have to divide that seasonally. So if it's 5% in January, 5% of 400,000 is 20,000. Yeah. So January might be 20, but July might be, 40 or 50. So every week they know exactly what they have to generate per day and per week. And you give them the results every day and every week. And if they're not doing it, you have a little piece of paper that says, hey, I'm paying you this because you said you can do this, $400, $1,000 or whatever it is. And we're going to track it every week. And we're going to reevaluate your pay after 90 days. There's no surprises. They may be able to do it. And then, you pay them a bonus over the 400,000, They're not doing it. Guess what? They won't be there or their hourly wage drops. And
Well, I
they
mean, it
know
was a data-driven decision and not an emotional-driven
it's
decision.
not emotional.
Now, what happens if, and then this isn't necessarily a financial conversation. This is more of probably marketing side of things, management, accountability type stuff. But if they come to you and say, well, look, I only got X number of calls per day when I really needed, X times 2 in order to make that revenue actually work.
Yeah.
Like, do you present them with coaching options or how to present better options, or are you just fall on the sword and say, yeah, you're right?
No, it depends upon, if they're getting 4 calls a day and everybody else is getting 4 calls a day and they're only producing $1,000 of revenue and somebody else is producing 3, they have nothing to stand on. It's that. If they are not getting 4 calls a day and everybody else is getting 4 calls a day, you got to figure out why. All right. If nobody's getting 4 calls a day, remember, we seasonalize the amount of revenue that has to be generated. So, they might get 2 calls in February a day. So their revenue number is lower. But I promise you in July, if you're in Atlanta, Georgia, or you're in Savannah, or you're, where you are, or you're in Florida, that number is going to be huge. It's not going to be that big in February. So they won't get the same amount of calls in February as they will in July.
Yeah, I agree 100% with that. It's the challenge that I have is that hiring someone this time of year, and in Savannah, it's typically pretty mild all winter long. It doesn't really get cold, maybe for 2 weeks or something like that. And they never really perform. Like, they never really blow you away because you're hiring them at the end of the summer, and then you're going to wait until next summer for them to really shine. And I've done this once or twice, and they we muscled our way through the slower season. And then one person actually put in their notice about 2 weeks before May. And I'm like, oh my gosh, I want to slap you right in the head. Like, you didn't do anything. You failed all winter, and I failed with you. And then all of a sudden you're going to put in your notice when I actually need you. So how do you have that conversation with people whenever, should you just not hire this time of year if you foresee that being the case? Or
you find a good tech, I don't care whether it's slow or busy, you hire that tech. All right. You can always do marketing to find work for that tech. Always. You also are dependent upon maintenance agreements, usually in slower times of the year, especially like Savannah in that time of year. And you can always do special offers, for your maintenance agreement. And I'll give you a perfect example of this. And it doesn't happen to be residential, it happens to be commercial. One of my clients only does commercial. He doesn't do any residential. And his new construction crews finished a job October-ish, and they had nothing major on the books until April following year. So, I mean, what do you do with these guys? If you lay them off, guess what? They're going to go someplace else and find jobs. Do you pay for their wages over the winter? I mean, it was a real dilemma. So believe it or not, this public works RFQ came out. Started in end of November, beginning of December, ended in the spring. Wow. Had to get that job. Wasn't an option. Had to get it. Because we needed work to keep the guys busy. So they know their costs really, really well. We bid it at $5 net profit per hour. I mean, that's right even in my book. But
you didn't have to lay them off.
Exactly. So it actually came in at 6. How many job costed the job? But the point is that they
wouldn't have been able to.
They
wouldn't have been able to do that. They would have either lost their people, had to pay their wages out of pocket, and they would have had nothing for them to do for 6-7 months.
Or if you didn't know their P&L, you're just stressing the whole time. Like, am I losing money? Am I making money?
Well, they would losing that in that department if they weren't busy. Think about it.
Yeah.
You have no revenue, you got to pay the costs. Give me a break.
Absolutely.
There's a simple math problem for you on the screen. 6 is better than 0. That's great. I don't know who commented that. That was great though.
Yeah. It's a struggle though. I mean, and it's a real struggle because you don't want to lay off people because they're hard to find. It's hard to find great people. And At the same time, you don't want to lose money. And I've done that before where I've come out of my own pocket to keep guys busy, that I just wanted to have them I wanted to have them because it was slow. I wanted to have them for the springtime. The struggle that I have with that type of scenario that you just described is the technicians knowing that, hey, this is our slow season. I'm sorry. We need to make sure this job lasts until April. And so then it really starts hitting the bottom line, because you have to really just like lay the whip on them. And it's like, speed up, but I don't have anything else for you to do.
No. But basically what they did is said, okay, week 1, this has to get done. Week 2, this has to get done. We laid out what actually had to be done every single week. Did we do it or didn't we do it? All right. And that's essentially what happened. It wasn't like, go out and do this job.
Mm-hmm.
It was like, okay, phase 1 is this. Phase 1 has to be completed by this point in time. We have to do X, Y, Z, A, B, C in phase 1. And then phase 2, we have to do E, F, G, H, I, J. And then we started up,
Mm-hmm.
So it wasn't like, go do this job. It was well thought out. It was well planned. We knew it was break even. I mean, $6 an hour, $5 an hour, which is what was bid, is break even in my book.
Yeah.
Absolutely. All right. So, we didn't leave them to their own devices. And we said, look, we're taking this job at break even to keep you busy over the winter. This is what has to happen between now and whatever it was, April, May, whenever, and, we have more work starting then. However, this is the job that's going to keep, we were the owner of the company was very open with them. It didn't, blow smoke up their butts or anything like that.
Absolutely.
Yeah.
Well, that's why it's so important when it is busy to make sure your pricing is right. Because and maybe you can correct me if I'm wrong, but I feel like a lot of companies feel like they're making a ton of money when it's busy, but it's also the easiest time of the year to let things slip through the cracks, and all of a sudden your net profit actually is not as good because you're not catching things. Everyone's just running around trying to take care of their customers and stuff like that.
Accounts receivable goes through the roof.
Accounts receivable goes way up, and nobody's managing that because they can't get off the phone during the day. I don't know if that's what you see, Ruth. Obviously, you in charge of that with your clients, so you probably manage that a little better. But do you see that when clients come to you, that sometimes their profitability actually is less when they're busier than when they're slower?
It can be, because if you are not charging overtime rates and you're paying overtime, it will be less. It's not an option. It will be.
That's a good point too.
So, and one of the other things that we don't do, unless there are specifically maintenance techs, is do maintenance when it's hot.
Yeah.
If somebody needs cleaning, they get it at the regular rate, less the discount.
Josh and I were just talking about this the other day. We've been talking about it all summer, actually.
I had a client reach out to me about that, because they run a maintenance program, and they wanted to change. We talked about changing their terms and conditions and stuff like that. Like, if the whole point of you being on this maintenance program is so when we have time, April to whatever, or March to end of April, and then October to November, or whatever it is, we schedule you. Otherwise, you have to pay the regular rate. You're not getting this discount. You're not getting the percentage off of this, that, and the other thing. That's the whole purpose.
Well, the thing about
it has to be clear, and you have to stick to it.
Whenever I talk to my CSRs about this, if someone ever mentions that they need maintenance twice, that's my thing. If they mention it twice, we go out there, because I assume that's a service call. Yeah. Because they want us out there. They just want us to come out there for the maintenance, and
they want it to be under their maintenance when it's actually a repair.
Yeah. But
the only way around that is if you have a maintenance tech, and all that. It's a great entree into this industry is through maintenance. And this maintenance tech, and quite frankly, I'm going to plug women in HVACR too, because women make great maintenance techs to start. They make really, really good maintenance techs. And so if you have a maintenance tech who's doing maintenance 12 months out of the year, guess what? If it's hot in July, you can do maintenance.
Yep.
But if you don't have a maintenance tech, you can't take a service tech off of a regular service call and have them do maintenance. It's not profitable. So, and the other thing is that you can do heating maintenances the whole year. Now, you can't do cooling maintenances in like Wisconsin unless it's 60 degrees out, but you could do cooling maintenances in Florida in January. it stays above 65 degrees. You know them.
I always hated AC season because it would in Wisconsin, it would tease us. It would be like, it would get to 60 or 65, but it'd be like 2 p.m. And I'm like,
It's too late.
we can't do anything in this. Like, you can't do anything. I mean, it's always a tease when it comes to like May. It's with things heating up. It's a lot better than it used to be, but it was pretty rough when we first started, especially when I was trying to learn that.
Yeah.
But definitely get your point. And that's the thing. We're always looking ahead, always looking ahead for financials, always looking ahead for the weather, always planning ahead for your pricing. All this stuff takes planning. You have to set time aside in your day to not get pulled away by this job and this company over here. You have to find time to prepare so you are profitable and you can make good money in this business.
Yep, I agree.
Absolutely. Miss Ruth, where can people find you and connect with you and follow you? And obviously you have a ton of books on Amazon.
If you go to hvacchannel.tv, everything's there. If you go to ruthking.info, everything is there too. So 2 places you can get a hold of me. And if you want the chart of accounts or you want the bookkeeping test, send me an email. It's Ruth King, RUTHKING, at hvacchannel.tv. I am happy to send it.
Mm-hmm.
I promise you, it will open your eyes.
That's awesome.
It's Ruth King at hvacchannel.tv for the chart of accounts and the bookkeepers
Test. And answers. I'll send you the answers too.
We appreciate you spending some time with us, Miss Ruth. Is there anything that we forgot to mention?
No,
I'm sure there's tons that we could talk about.
Industry, and we all love this industry. Let's be profitable so we can continue to enjoy it.
Absolutely, absolutely. Will you be at the event, the Women in HVAC?
Of course. I started the organization.
I know. So that's super exciting. We'll be out there. Josh and I will
be
out there. So.
I'm looking forward to seeing you out there. It's going to be a blast.
We will have to get you back on live at the events because we're going to bring Tersh's going to bring his entire gun case of all of this.
Oh, cool.
He brings it's this huge gun case. That's kind of funny, but we'll have to get you back on live and learn more from you.
All right. My pleasure. I'll see you out in Phoenix.
All right. We'll see you. Thank you so much.
Thank you.
We'll see you.
Thank you for listening to this episode of Service Business Mastery. Now that you are equipped with essential business advice from this impactful conversation, you are one step closer to becoming the successful owner of your dreams. If this episode has been helpful to your business journey, don't forget to subscribe to the show, leave a rating, and share it with other owners as well. Visit servicebusinessmastery.com to learn more.